Welcome back to the Warlords of Wall Street. Well, the day went pretty much as we anticipated. Most people had digested what Powell said yesterday. They had made their decisions on what he had said. He really didn't say much, anything different today. He didn't run into anybody who was as misinformed as Warren was yesterday. But I think the market being up and down, and just for the most part, although the Nasdaq was up fractionally, the S&P, the Dow was down a little bit. Essentially, that was just digestion. Everybody has a pretty good idea now about where they stand, and now everyone's holding their breath for Friday. It starts with the shoe dropping with the jobs report. Then next week, we'll start getting CPI numbers again, PPI numbers again, and that's going to be the tail that wags the dog for where the Fed's next move. Powell said very clearly we're going to be data dependent. It may very well be, if these numbers coming in next week and so remain elevated, they're not going down to the degree that the Federal Reserve thinks they ought to have inflation under better control, then you can expect that at the next Fed meeting, that when they come together, they may very well be discussing a 25-point raise being elevated to a 50 bip raise. I'm still of the mind and in the camp that it's a 25 bip raise. And then shortly thereafter, at the next meeting, another 25 bip raise. And then if we're still not seeing the information on inflation coming down, then the lag effect that everything he's been trying to do with the exceptional rate increases since last year, this lag effect, if it's not biting by then, if consumers are still pushing their purchases by then, if we're not seeing anything meaningful happen in the reduction and getting back on track and starting to work our way down under 6%, I think there's a very good chance that we see a third 25 bip. And at that point, I just can't imagine that they would have to go any further. That brings their terminal rate to more like 5.5, 5.75. I know a lot of this it sounds like gobbledygook to those of you who are maybe joining in, but we're trying to keep it as real as possible for you, as simple as possible for you. The fact of the matter is, the only thing that matters in the market now, less than corporate earnings or forward guidance and what have you, it is all about inflation, and it's all about everybody's speculation about what will the Fed do with rates. It is the only story in town. Nothing else matters. And unfortunately, we're going to continue to see some bouncing back and forth. The VIX jumped a little bit today. And if you'll remember from one of our last podcasts, the VIX is a thermometer on put activity, options activity in the market. And essentially what that is, an indicator of negative sentiment. So the VIX was up a little bit. Not a surprise given the volatility we saw yesterday. We saw some pretty good volatility today. All things, although the last hour or so, the market seemed to heal itself and reconcile the fact that there's nothing to fear up at this point until we see the numbers next week. But that doesn't stop all the talking heads we see on TV from wringing their hands and sitting across from the desk, and someone's arguing for a recession, somebody's arguing against, the market's going to be okay, it's going to go up. The other guy's saying, nah, it's going to drop another 10%. I don't buy that for a second. However, this is what ratings are made of. So you have to take it with a grain of salt when you're watching these folks on MSNBC, CNBC, etc., Fox, on their financial channels and what have you. Everybody's got an opinion, and if these people actually were experts about anything, they would be out there running their own mutual funds or hedge funds. They'd be too busy. Even the very best money managers in the business are too busy to go on talk shows, because they make more money per minute sitting behind their desk doing what their customers pay them to do than running up there and sitting at a desk espousing their rhetoric about where they think something is going. and all of those that actually do have time slots and are regular panelists and what have you, I can assure you they're not managing that much money. And they certainly are not in the pantheon of the top 15 or 20 percentile of whatever category they happen to find themselves playing in. I'll almost assure you of that. So be careful when listening to what the folks on TV have to say. And I guess the exception is of course of what you hear on YouTube. But for us, it's all about that's where the Patreon account comes in. Today, if you looked and just to try to be as transparent as we can be, the Patreon account is showing you what our trades are. We're showing you in real time what we're doing over here. And when there's a mistake and when there is a loss, you're seeing it live. We had talked about what we had done with DPST. We've made a couple of nice trades, made our little 5%, but unfortunately, the timing is such with Powell, we didn't anticipate per se that the bank stocks were going to react as violently as they did against his commentary. So we've had a couple of stop losses in a row that have cost us the 10% we made on DPST. Now, we happen to go after it yet again today when I thought it was very close to bottoming around 2. We turned around and put our position back on at $20 and a nickel, and we made about a point coming back the other way, a little over a point coming back the other way. But where we are now is what we had in our pocket for profits, the stop losses took away from us. So all of this thrashing up and down has accomplished exactly a 1% profit for us. This is not how you make big money, folks. This is the frustrating part of the market. We feel very good about the health of banks. We like the regional banks more than we do the big money center banks because typically they're less volatile. And that DPST is actually indexed against a regional bank fund whose symbol is KRE. That's a non-leveraged version, and I would probably say that it's a better place for you to be as opposed to the DPST, which is a trader's mechanism. That's what we play with when we're trying to get in and out. But if you're a believer that your local community banks and the larger regional banks like Truist and what have you is less susceptible to the whims of the world and the economic mechanisms that can cause losses, which the huge world money center banks make loans to. Budapest. They have exposure to Russia. They have exposure to Ukraine. They have exposure to third world countries and the loans that they make and the roles they play. And if you want to avoid all that, well, then you stay with regional banks and community banks. So KRE might be something that would be worthy of you taking a look at. Take a look at it. The market, for the most part, uneventful, will continue to remain uneventful. The only big news that I saw today that I found to be interesting is Silvergate is, of course, liquidating, and it continues the theme of any business associated with the clearing of, the holding of, the storing of cryptocurrencies is something to be really analyzed hard. I am not a fan of cryptocurrency, never have been, and anyone that's known us for any length of time and has listened to me speak on the subject, right back to when it was the hottest thing in the world and everybody wanted it, my take was very simple. If crypto, which is just a synonym for hidden, I love the blockchain and the technology that underlies it. I love the idea that you can literally tell me what field that tomato came out of, that went on what truck to what processing factory, and then ended up in what can that ended up on what shelf in grocery store in America. I find that to be wonderful. That is revolutionary and will continue to help shape our retail economies, or for that matter, it'll spill over to every aspect of life. And this is the foundation on which cryptocurrency rests. And in that respect, I don't have a problem. But no government is going to allow currency to be used in a transaction, whether you're paying for goods or services, that they are not able to, one, track, two, regulate, three, and maybe most importantly, tax. No sovereign government is going to allow commerce to exist that they cannot oversee and that they cannot tax the profits and the business going back and forth between the parties. And because of that, and because of the base nature of what cryptocurrency is, I've never been a fan. You can keep it. It's a game for the young and the adventurous. I know that it has some proponents that are very well respected, but I am of the camp of Munger and Buffett that just say it's as close to a Ponzi scheme as I've ever seen. So I tend to stay away from it, and I want to buy real companies that make real money that I can see and has somebody looking at the books and they're following generally accepted accounting principles, and there's a whole host of rules that they operate by. So we will continue to play in the sandbox that is equity investing, buying stocks and bonds and such, and we will go ahead and leave the craziness to the crazy. So, with that having been said, tomorrow is another day. We hope that we see a little bit of an improvement in our portfolio. Keep your powder dry, take your profits where you can, and be safe out there.